Yo, today we're going to be talking about crypto taxes and what you guys need to know about reporting your digital assets, especially once you start running up that big bag. If you don't pay Uncle Sam, they will try and put you in jail. So just make sure you guys are on top of your taxes, on top of your financials, and keep all your reports in a secure place and know what's going on with your finances. Let's jump into it. So the IRS and many global tax authorities classify cryptocurrency as a property and not a currency. So this means that your crypto is subject to capital gains and loss taxes, similar to stocks and real estate. Okay. And the holding period is crucial. It determines if your gains are short term, which is less than a year, or long term, which means over a year, affecting your tax rate depending on how quickly you sell or operate your money. Okay, so taxable events. Let's talk about when you guys owe bread. Okay, so when you're selling crypto for fiat currency such as USD, euro, any Chinese currency, yen, etc., this is the most common taxable event when you're just exchanging cryptocurrency for your bank currency in whatever country you're watching from. Okay, and you also get taxed whenever you trade one crypto for another. So, for example, if you're swapping your Bitcoin for some Ethereum, then the IRS treats it the same as a sale and a buy. And if you use crypto for purchases, so paying for goods or services with crypto is a disposition of property. And getting paid in crypto mining or staking rewards are also taxable events as ordinary income. But there's a lot of benefits in this though, because holding your crypto, and let's talk about hodling and holding in general. So the act of holding, and even as the value skyrockets, you have to position your future family, position your grandchildren, children, whoever, and just build the groundwork for them. Okay, so when you're coming into an investing mindset, you shouldn't even be thinking about bread. You should think about the fact that you're planting your bread in good position. Some of you guys aren't getting profitable because you're too worried about making money. Whole time at the end of the year, you end up on a negative equity curve. Okay, but the trades that you're taking, you need to focus on not losing money. Any trade that you take where you think you're not going to lose money is the trade that you're going to take. Okay, it's been a lot of risky situations, people copy trading, people getting rug pulled on, etc., trying to make quick, fast bread. Anything quick and fast, you're most likely going to get destroyed. And you're not going to have the discipline to maintain it, even if you do run up that big bag. Okay, get rich slow is going to be the mindset. So your tax liability occurs later, but holding, once again, does not trigger a tax event. So if you hold Ethereum from 4K to 20K and you make like 100,000, 200,000, you know, you can keep holding honestly, and you're not going to get taxed until you do actually sell. So it's not like you get taxed per dollar. So you get taxed for when you sell. And once again, if it's a long-term gain, then the tax value is going to be different versus if you sell within a short-term value, which is going to be within less than a year. And moving your crypto from your Coinbase account to a personal wallet like Phantom or something like that is a tax-free transfer. So you don't got to worry about that. So let's talk about capital gains versus losses. All right. So gain, when your sale price is higher than your cost basis, and loss, when your sale price is lower than your cost basis. So tax loss harvesting, you could use your crypto losses to offset gains and up to $3,000 annually against ordinary income. So meaning that if you guys were to take some losses, you guys can actually write that off and get some benefits. And a really good suggestion too, you guys can also get an LLC, make your home your work from home, and so you guys just trade work from home. You'll also get some tax benefits there too, especially if you trade underneath the LLC as well too. So there's actually a lot of tax benefits for business owners, and the only people who really get destroyed by taxes are people who don't take the time to open up their LLC, open up their business checking account. Anybody trying to do anything with their personal checking account, personal information, personal social security, instead of their EIN number through their business, the tax implication is going to destroy you due to the fact that it's not bringing any value. And the world runs off the stock market. So any new IPO, any new company that comes out is going to be more value into the world, more people trading, more money flowing. So the more ideas and the more things that there are for people to purchase, then the more money is going to be flowing, which means more liquidity within the stock market, which is why since there's been so many of these online companies, stock market's volume has been highest it's ever been. I assume it's going to continue this trajectory as well too. And talking about income tax as well too. So income tax applies to crypto earnings, and report profits on actual tax returns and understand your tax bracket implications, how much you guys are making from cryptocurrency. Keep a report of everything, keep everything organized as when you guys report your taxes every single year. going to get a lot easier. You're going to be in flow. You're going to be in a process. And Uncle Sam's not going to come after you. Inshallah. So taxable events in crypto. Understanding when and how crypto transactions can result in taxable events for crucial compliance. So transaction fees. You can actually deduct transaction fees from your broker incurred while trading cryptocurrencies. So whenever you guys are doing your tax forms, don't forget that whatever fees that you've lost for trading. This is why you shouldn't be spam trading. Some of you guys are day trading and the money might look good in your face, but whole time you're not making more money than somebody who's trading shares over the course of years or holding crypto over the course of years. Since short-term tax is there to subside you. So long-term tax, long-term traders are getting way more tax leeway versus day traders. Day traders get destroyed with a lot higher fees, a lot higher taxes. So sometimes something in your face might look like you're making money, but whole time on the back end, on your end of the year equity curve, if you would have been trading shares or holding crypto year after year, then your taxable income at the end of the year would subside whatever day trade income you were making. Okay. And investment losses, offsetting gains with losses. Realized losses can reduce your taxable income from crypto investments. Okay. So you guys can do like up to $3,000 in losses. I believe you're able to write off in your tax form as well too. You can also write off any educational expenses. So any courses, materials, whatever you guys pay for, you are also able to write that off on your tax documents too. Okay, so it's a lot of leeway. Once again, when you guys are trading underneath an LLC, okay, things become a lot easier. It becomes a lot better, and you guys are pretty much just going to be able to dominate in a lot more productive way. So LLC trade possible. Short-term gains. Short-term gains are subject to higher taxes than long-term gains, okay? Which means that my day traders, you guys are getting taxed way more than my year after year shares holders or crypto traders, okay? So once again, even it might seem like you're making a big bag, but then you're gonna get hit with harder taxes, which could not equate to the same amount or even less than you would have just bought and hold shares. Okay, so if you're a futures trader or options trader or whatever, yes, you're making good money, but understand that there's going to be harder taxes for if you close trades within less than a year. Okay, and long-term gains benefit from lower tax rates and favorable treatment. So the market pretty much wants you to be holding for years and keeping value within the market. And key tax developments. Okay, 2014, the IRS issued guidance on cryptocurrency taxation, clarifying reporting requirements. So that's kind of when talks of crypto, white papers, and stuff like that. And white paper is going to be the official document which explains what the cryptocurrency does and its role in the future and society. And after it started bubbling around 2021, and now I believe Trump is trying to remove capital gains tax as well too, as it's 2025. Okay, so as it's 2025, crypto capital gains tax is trying to get removed. But in 2021, new regulations were introduced requiring reporting for transactions over $600. Okay, so if you made crypto bread over $600 or swapped it around, then you got to do your taxes. Okay, stay on top of everything. Stay prayed to God. Keep grinding. Don't ever give up. If you guys need help with any information, investing wise, trading wise, business wise, head over to StackMODE on that. Catch you in the next one. Peace.